Hey guys, good to have you here. I want to look at all the major locations around the world and look to the price charts to see and hear what they are telling us. I'm going to start with the S&P 500, and that's going to represent the United States. And every chart you're going to look at for locations around the world are going to be 3.5 years in time range. So the first thing I noticed with the S&P is the place it looks like it's wanting to go is the low of 18. So the low of 18 is right here. And if the S&P wants to go down and test that, and it looks pretty much like can you say sure thing at anything that's been going on? But it looks like it really wants to go down and test that low and see if there are buyers there. If it does, that means the S&P is going to have to dip down to about 32 or 33% in total, a total loss. But that definitely looks like where, well, for sure the buyers came in there before, and it looks like that's where the market wants to go down and check it again. If that's true, then the market's got about another 4% down. Again, it could gyrate around, but the key level, at least for the United States, is to see if price holds above 2018. And as we go around the world, you're going to notice that the US is still the strongest location on the planet and has been for about a decade. So the next place is, let's just go over to Europe. Let's look what's going on with Europe. Now, this is the 2018 low for the S&P 500, and you can see right here that the Euro Stock 50 has crushed and just moved right through that with incredible speed. To date, that's down about 37%. With the, you know what, I'd have to go back and look at the S&P. The S&P over the same time period is down 29. So Europe is getting hit much, much harder between the two. I have to zoom out more to see where Europe is going to want to stop. And I get to this 2016 low, and the thing is, Europe has moved right through that. So it'll be interesting to see. I'm recording this close of market on Monday the 16th. So it'll be interesting to see if Europe turns around with that low of 2016, because that was a double bottom there. And that's a significant turning point. But buyers did not come in, which means we've got to zoom out even more to see where would this want to go. And sadly, if this can't hold, there's a lot of support around here. So if you want to be bullish on Europe, you really want to see the price hold around here, because really the next major support is about another 20% down from where Europe is right now. And that means if it does come down to hit these supports, we're looking at about a 50% fall for Europe. And like I say, Europe is acting much, much weaker and has for years, and maybe you can start to even measure it in decades, but Europe has been a very weak part of the world from an equities point of view. And then we have international, or really this is all world ex-US. So this is looking at everything in the world. Europe, Far East, Australasia, everything, all the stock markets, but not the US. And this market's down 32.5%, so not as bad as Europe. But again, we've got to zoom out, because I'm not seeing a lot of support on this 3.5 year time range. And again, sadly, the next major support I really see is right around that 2016 low. And it's not that far down. It's only about 8% more to get down there. Now, when I say not that far, guys, I'm not saying any of this with a trivial angle or thought, but simply looking at price and where price wants to go. And it didn't even stop here. It didn't even stop here. Again, I'm looking at VEU, which is an all-world ex-US ETF. And so now we have Europe looking possibly to its 2016 lows, and all-world ex-US looking to its 2016 lows. Let's look at China. COVID-19 started there, and perhaps it's already been resolved there. This is the index, the Shanghai Stock Index, and it was going sideways before this started, and it's going sideways now. It's held up incredibly well. People can say, well, that's China, they're buying it, or they can control it. It's like, yeah, guys, but it's still the second largest economy on the planet with a population that has a lot of money. And so China is holding up really well. I do want to show Italy for one more location. I wouldn't normally show Italy. It's a small equity market. I already showed Europe. It's not something I normally show. And actually, before I do that, I'll just throw in emerging market because that is a major um, kind of component of locations around the planet. And as you can see, it broke its 2018 low with really ease. But to provide something, we have some support over here. It's already at its 2016 low support. So let me just zoom out and show you that here we have this 2016 support here. Actually, I said 2016 low. So it stopped there. Europe didn't stop there, and international X or all world ex US didn't. So if you're bullish on emerging markets, you absolutely are going to want to see it stop right around here. And if not, it's going to want to test its low of 2016 too, which that means it could be another 18% down, which that's going to look very similar to Europe and international or all world ex US. So what's the takeaway? What do you do with this information? It's one thing to see charts and have some ahas or be entertained. What's most important is what is actually going on with your portfolio. And one of the things I train people to do is to avoid all the weak areas on the planet. I know we're taught to over-diversify. I know we're taught to have some of our money in domestic markets and some of our money in international markets, but that diversification model is decades old and it doesn't hold true anymore. And unfortunately, people are unnecessarily over-diversifying their portfolios, and it's hurting them. And the point of me wanting to end with this is it's bad enough to be hurt, but you don't need to make it worse by being over-diversified. And so just want you to, I guess, think about that or drop that seed that over-diversification isn't quite, now no one calls it that. Diversification has actually become over-diversification for people, and that's one thing that's making this a lot worse. Thanks to you guys for being in my world. I'm going to be posting this to my YouTube channel. It's the fastest way I can get information to you. So if you find that this is of value to you, go ahead and subscribe to the channel. And I'll be updating here most frequently. Okay, thanks so much.